Welcome to another episode of Inside Crypto, where from a hedge fund's perspective, I show you our view on the cryptocurrency market. Let's start with Bitcoin. Finally, it has surpassed 100,000. My optimism from the past few months is finally materializing. It's even more optimistic and nice that Ethereum has finally joined in, as Ethereum is a much more important indicator for me than Bitcoin, because Bitcoin is somewhat like gold. I believe that even if the broader market situation is weak, Bitcoin, like gold, is heavily dependent on the global money supply and so on. And Ethereum is the grease, the fuel of the entire crypto market. A lot of projects, many alt projects are based on Ethereum, whether on the second layer or the main one. So Ethereum is what fills me with incredible optimism, and I'm glad that finally my optimism, which I've told you about, Tobru, so many times, that crypto was incredibly strong during this wave of Wall Street sell-offs related to the bears. There, the strength of crypto was visible, and now you can see that as Wall Street rebounds, crypto is really doing amazingly well. So let's see how this translated. 2 weeks ago, I showed you moments where you could jump into second positions. And as it often happens in a strong market, well, there wasn't a single fill, at least on Bitcoin. If someone wanted to jump into second positions, not a single buy order would have been executed here and there, right? That's how it is with a strong market. Hedge funds weren't able to manipulate the market enough to trigger any liquidations. So let's look ahead. Here we have cascading liquidations. So like it's quite dangerous, and the market strength is immense down. And you can see that there are almost no liquidations at the top. So the fact that the level will break is a no-brainer for me. I can't imagine the market not reaching 105,000 next week or even this one. And if it goes down, well, it would be worth trying to jump onto this speeding train. As you saw from last week's summary or from 2 weeks ago, it's difficult, but you have to try. You have to try to go below 100,000. I think it will be an opportunity for those 97,800, those liquidations of 98,000, or even around 100,000. Let's hope that hedge funds will manage to touch their to push some players out of the market, so we can increase our long exposure on Bitcoin. And Ethereum behaved beautifully here. Look at the analysis from 2 weeks ago. The bottom, just perfect. You could have simply caught on to this manipulation along with us by some hedge funds, some big capital pushing out of the market at these liquidation levels. Unfortunately, only at the initial levels, right? There were also subsequent levels here, but it's not that easy. And if someone set up with long positions, as I mentioned probably 2 weeks ago, that it's worth setting up a bit at each level. Well, only the first level got caught, but at least it got caught. Well, it depends on how greedy we were, where we placed it. It literally just brushed it. And as is usually the case with strong movements, that's exactly how it looks, like those good positions. When they come in, it's just barely, everything is just barely. And that's how it was this time. Well, I hope you managed to catch it with us, because we actually succeeded. And looking forward, liquidations downward, how to jump on this train? Well, if it were to drop to 2,000, it's a no-brainer that you have to take it. But I doubt we'll go down to 2,180, 2,200, or 2,260, 70. Well, if there were some manipulation. I doubt someone wouldn't be tempted to push the market down to clear those stop outs around 2,270. And you will probably be able to catch on thanks to that. And upwards, there are such nice positions, such strong liquidations at 2,350. I can't imagine someone not being tempted to clear that out, or even up to 2,500 of all those stop outs that are here, and taking advantage of the fact that things are going so well. Yet in crypto, we decided regarding our Brightpool project. Firstly, to launch an invitation link for you, because the project is still invite only. So you can read about it on Brightpool.Finance. But we have launched a partner link with Brightpool.Finance, where you don't need an invitation. You can go to that link and see the application, which in this invite-only model has so far generated $16 million in turnover. In the treasury, meaning the profits generated so far by Brightpool, it's almost $31,000. And it's a very, very, very interesting situation. Because BRICS, the project's cryptocurrency, is currently valued on the exchange only on DEX. We plan to do a listing, but that will take some time only after we open the project. The price of BRICS is 4.75 cents, and the treasury back value is 4.9 cents. What is the treasury back value? It is equivalent to a book valuation. This is the price at which we are able to buy back literally all tokens from the market using the funds accumulated in the treasury, which are used to build this pool. It's a very interesting situation because it shows that BRICS has not yet rebounded. But it's only a matter of time, because if not the users, then we will soon start buying it back, because it's hard not to start buying it back if it is valued at an absurd valuation at which we are able to buy everything, and in reality it makes no sense not to. All right, as we promised, if the prices fall below, we will start buying it back. So it's a very interesting situation. And by the way, I believe it should be valued several times higher than its fundamental value. But even at this fundamental value, absolutely. And by the way, announcements will be coming soon. This is the new panel view. You won't see it yet when you enter Brightpool.Finance, but this is the view of the new panel, where you will also be able to click through the order book. As a reminder, the project involves rewarding pending orders with cryptocurrency from the BRICS project. And these BRICS will be used in the future, so that you can, of course, sell them. You can already sell them, as you see on Camelot, but you can keep them, mine them for free now. For placing orders, you receive them, and in the future, you will be able to freeze the price with them. Yes, and that's it. That's what we plan to release, maybe not this quarter, but probably next quarter, and as the ability to freeze prices. So if Ethereum was $2,000 a week ago, yeah, you could have frozen the price at $2,000 and come today. Okay, I have $2,000 frozen. I click, I buy for $2,000, even though Ethereum is over $2,300. So this kind of price freezing, similarly for selling prices. If you don't want to sell Ethereum now, but you would like to freeze the current price, which is 2,300 DIM, and decide whether to use it or not. After a week, you come back and look, okay, 2,300 suits me for selling next week, right? Then you will sell for 2,300. But if you see that the price of Ethereum is 2,500, you don't have to use this freeze now. You can opt out of it. A very nice option underneath the Black Skulls model, the Nobel Prize, options, and so on. A very advanced project under the ground, underneath, but on the surface. It is presented in a very accessible way as price freezing. And soon you will be able to whitelist yourself on Monday or Tuesday when you visit our website. you will be able to whitelist, because on the occasion of launching this service, we will soon release an NFT collection where you can get an NFT with a frozen Ethereum price, which will be somehow drawn or generated. And we have locked in all the historical Ethereum prices in the entire NFT collection from $20 to almost $5,000. And depending on which NFT you mine, you will be able to either sell or buy at whether it's $20 or $4,000. So it's a kind of promotion to illustrate to users what this price freezing is about and what the project is aiming for, because it is now building the treasury, building the liquidity, building this pool, the bright pool, right? A smart, bright, enlightened pool to provide users with the service of price freezing. And that's all for today's episode. Thank you very much for your attention. See you next week.